Hello guys, welcome to your market report. Really glad to have you guys here today. Today is Thursday, November 1st, 2018. Going to change the format around a little bit here on the market report for the next few days. I'm going to get right into the meat of the markets, and then after I'm going to talk about a little bit of a subject of interest. So what we're going to get into right now is we're going to open up the charts right here, and we're going to get started with cryptocurrency. Bitcoin's been going nowhere. 63.02 is the price, and it's just been going along. Well, we had a little raise in price when it went down there, but it just basically come back up, and it's found a price around $6,400, but going around that range. Let's take a look at cryptocurrency market capitalizations. $205 billion, 54% Bitcoin dominance, and basically Bitcoin is in a rut right now. You've got your HODLers, don't want to let go, and you've got your bears who are trying to push the price down. So you got two opposing forces, and it's like a tug of war. So now let's take a look at the silver price today. It's probably the biggest mover and shaker today. Silver is on the move. It's moving. It's trending upwards, but like so many times before, we've seen this price move up before. Today is the green line, by the way, and we've seen a pretty good substantial price increase today of 37 cents, $14.58. But like I say, we've seen this before, and they always smash it back down again. So I mean, at this point, I'm just kind of like, I don't get excited anymore when I see the price go up on silver. Let's take a look at gold today and see what it's doing. We got $1,229.70 today. It's up $15.60. You know, and like I say, both gold and silver, I take a caution when I see the price go up because they keep slamming it back down again. Anyway, let's take a look at the Dow. Wait, I got 2 minutes left. I got to wait before we take a look at the Dow. So let's move on to cryptocurrency. We've done that. Sorry. A bond market. These bonds are creeping up, starting to heat back up again. Honest to goodness. The U.S. 10 years back up to 3.164, and on the long end, she's been creeping up. And we got to keep our eye on that U.S. 10-year because that is the bond that most debt is underpinned on. And it's at 3.164. It's bouncing back quicker than I thought. It went down to like 3.07 or 3.06 after the market rolled over a little bit there and corrected. And now we're up to 3.164, so it's come halfway back, almost halfway back, to the 3.25 that I've been talking about for ages. And it's creeping up toward that, and rather quickly. It could be there in a matter of days, or just a few more days if it continues to rise at the rate it's rising at. So now let's take a look at the U.S. dollar index today. 96.45. The dollar index has slid back just a little bit. It's gave up like about a half a penny since yesterday. It was 97 and change yesterday, and today it's 96.45. This would have a little bit of a bearish effect on gold and silver, and it's probably the reason why gold and silver is moving up today is because the dollar's moving down a little bit. The dollar's losing a little bit of strength. So now let's go back to the Dow Jones Industrial Average right now, and let me see if we can get a reading on it, because let me see what the time is. Yeah, 10:30. That's what time it starts here. We'll turn it here and mark it open, and we're up 110 points on the day. Now, here's the thing about this little bit of a rally that's going on in the Dow, you know. I don't think it's not going to be conducive if those bond rates continue to rise. that this rally is going to continue for too long, because these bond yields, if they get back up around 3.25, we're in the danger zone. On the 10-year, I should say. 3.25 on the 10-year. Then we're in the danger zone for this stock market. Any little trigger could set this stock market off now, and there's no real, there's not an awful lot of support down there to keep it from falling big time. So I'll tell you, I'd be very nervous about investing in this stock market right now. This stock market, there's only been 3 times in history when the stock market's been like this. And I'll tell you, it's every time it's always fell, big time, fell. Where would this stock market put a bottom in if it had a huge fall, a crash? Because there's not a lot down there to hold it, you know. It's built on credit, and credit is debt. And we're coming to the end now of a monster of a credit cycle, and that's just it. That's where the real problem lies, the amount of enormous debt that's been created. Anyway, I told you guys I was going to talk about something, so let's turn the charts off right here, and I'll tell you what I'm going to talk about. I'm going to talk about the Khashoggi case. I hope I'm pronouncing his name correctly. Over in Saudi Arabia, what happened with Khashoggi when he was murdered there not long ago, and how that could actually affect Saudi-U.S. relations. I've been following this story rather closely, and it hasn't went away. New revelations are being revealed. New revelations in the case are being revealed last night about different things, and it's not going away. And the thing about this is right now the oil price is down. Oil price is down really low. Saudi Arabia, it's all got to do with the approach that Saudi Arabia is taking to this. Is why oil prices are so low. Now, if Saudi Arabia changes that approach, oil prices could shoot upwards extreme. They could go up a lot. Saudi Arabia actually holds the key to oil prices through OPEC. And they were the ones that caused the 1973 oil embargo. And I'm going to tell you what, there was long lineups at the pumps for gas in the United States of America. I remember back then when that actually happened. Oil price shot up unbelievably during that time. And Saudi Arabia was responsible for it. This is not going away. If America takes serious punitive action against Saudi Arabia over this incident, it's going to have an adverse effect on the price of oil. Now, what that would cause is, if we get an adverse effect of the prices of oil, the dollar will lose value. Because if oil goes up in value, the dollar goes down in value. The Federal Reserve has been trying to get away with their quantitative tightening program without strengthening the dollar too much. They've not been entirely successful. The dollar has been starting to rise uncontrollably. It's getting up to the point where the emerging markets just won't be able to take it if it gets too much higher. So ultimately, if the price of oil were to climb significantly, it might actually cause consumer inflation and allow the Federal Reserve to continue with their quantitative tightening process just a little bit longer than they normally would have. We're going to have to wait and see what happens, whether this actually blows over or not. I can't put it any other way except that Trump is kind of keeping his head down in the sand. He's like an ostrich, got his head down in the sand when it comes to Saudi Arabia. I mean, and the thing about it is He's like those monkeys, you know, they got the three monkeys and you got one monkey. I don't see nothing. I don't hear nothing. I don't, kind of like Schultz on that Hogan's Heroes, you know. I know nothing. If you remember that show, you know, it was funny. So anyway, I understand exactly where Trump's coming from. I mean, Saudi Arabia and America have been tight for a long time, and there's an awful lot of business arrangements that go back and forth between. It's in the benefit of everybody involved if you don't antagonize Saudi Arabia too much. And I'll tell you what, if America takes any serious punitive sanctions and stuff, Saudi Arabia is going to be mad. They're going to be mad. And what the ramifications of that could be is a lot bigger than most people would ever think. Because, remember, they've done it 2 times before in the past, Saudi Arabia has. They've just basically, anytime they want to. Do you remember the guy on Seinfeld? He was called the soup Nazi, and he said, "No soup for you," and he wouldn't get any soup. Well, that's the way with OPEC. OPEC says, "No oil for you. You ain't getting any oil." You know. Now, of course, America has made themselves into an oil-producing giant, and America could increase oil production if the price were to go up. See where I'm going with this? So you get OPEC. If OPEC decides to cut off their own nose to spite their face and not sell us oil, you know, I mean, we'll produce our own damn oil. And I'll tell you, we'll be a lot better off for it. So my inclination in all of this is, I say to myself, let them go ahead and cut their nose off to spite their face, and let them try to do us some dirt. We'll get down and dirty, and we'll start producing some oil wells and some serious oil, boys. I mean, once the money starts flowing, once you get that price up, once that price doubles in the price of oil, you know, then there's no going back. Production in these oil fields, you'll have new wells popping up everywhere. Because, I mean, we got oil over here in North America. We got more oil than they got, for crying out loud. I'm going to tell you what. The biggest oil reserve on Earth right now, the biggest, is the tar sands in Western Canada. 196 billion barrels. Billions of barrels. Right? And I'm going to tell you, it's never been tapped much. It hasn't been tapped much. It's mostly all there. Now, the Saudis had a thing done years and years ago, and they said they had a little bit more. I think it was like 200 billion, just slightly more than the Canadian tar sands. But they've been tapping it for like 50 years. They've been sucking it all out of the ground, making themselves rich, living opulent lifestyles. They've had a silver spoon in their mouth all these years because of all that oil they've had. Okay, but they've tapped most of it. They're having to go in now and pressurize their wells with seawater, I think. At least I've heard reports. And so that's just one oil reserve we got over here. They've discovered new oil in the Permian. I mean, tremendous oil, enough to last the world quite a little while. But it's oil that's hard to get. Costs more money, but if you give it the more money there, you get the more money coming in there. It makes it affordable to go in and pump then. It makes it worthwhile. Then the banks will put the loans out, and by putting the loans out, there's money into the economy. You talk about something that'll stimulate the economy, nothing like it, boys. So Trump, you know, he doesn't want to antagonize them. I say go ahead and antagonize them, for crying out loud, and let them cut the oil off to us. It's probably the best thing they ever did. It would be just like cutting off ice cream to a fat kid. I mean, what's going to happen is he's not going to like it at first, you know. I mean, he's going to go hungry. He does not get his ice cream, you know. But then you watch him 6 months later, he's going to be in there and he's going to be playing basketball with the other kids. Because he's going to lose all that weight. And it's going to be a good thing, ultimately, in the end. And at first, it would be big, long lineups at the gas pumps here for us in Canada. It'd be like the little fat kid suffering because he didn't get his ice cream. But then later, after we pump all that gas and the economy picks up, That's just exactly what we need. So, I mean, the Saudis, let them cut off their nose to spite their face if they want to do that. And that's possibly what they'd do if America levies any sanctions against them. And I just got the feeling that these sanctions just might be coming for this, you know what I mean? So we got to watch out for this situation. It doesn't seem to be really going away. It seems to actually be growing, and the whole thing could just erupt into some sort of a punitive action from America against Saudi Arabia. It could. I'm just saying it could. So we got to watch out for it. Listen, thank you guys for listening. Like and subscribe. We'll catch you in the next show. Bye-bye, guys.